Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room for July the 14th, 2021. Live streaming in YouTube. We have a very exciting morning in metals and pretty much across the board as we got the producer price index that came out at 7.3%, which is year over year, and it's one of the highest levels that we have seen in about 11 years, I believe. Excluding food and energy, we're looking at about 5.3%, and also unemployment seems to have come in at about 5.3%. Let's take a look at the markets here and see how this economic news is affecting precious metals, digital assets, and the stock market. We'll be right back. Let's jump right into the gold market here. Trading last at about 1823.24, and as you can see, the chart here pretty much is indicating that the market has completed the sell to level on the daily numbers. The numbers that you're watching here basically are the daily numbers that we post. And you're looking at pretty much 1824.25 bid, up about $14-15 in gold. Silver up 24. Copper is about unchanged, down a couple of cents. Coin is up 250. GBTC is up 26. And as you take a look at some of the metals derivatives, we're looking at a slightly higher opening here. The grains are also up about 20 cents on soybeans and about 11 cents, 12 cents on corn, and wheat is up about 17 cents. Let's take a look and see on the news. The market rallied in gold to make a high of 1831.10. And as you can see here, coming into today, the algorithm suggested that if you're long into this rally, if you're coming in long in the futures, that you may want to unload some of your futures position and take some profits here. The thing that we're looking at is the market is making daily moves, completing daily targets, but it is also entering now the weekly ranges that integrate basically the codes into the weekly targets. Once the daily targets have been completed, the daily program goes neutral, and basically the weekly signals become predominant. And so we have completed basically the daily and the weekly sell one target of 1824 that was anticipated here a while back when the market traded above the weekly 1804 level. Now, what's active here is the weekly target of 1839. And once the market closes above the daily sell to level, it goes neutral. That program goes neutral, and now we're dealing with the with the weekly targets. And once the weekly targets are completed, then we move on to the monthly targets. And once those monthly targets are completed, then we move on into the yearly targets. But in terms of the where the market is right now, trading above 1810 is actually very bullish for the market because it activates the 360-day cycle. The average price of 1810. And, we're looking at the market trading above the monthly average. And so you begin to see that what we're looking at is the market's beginning to roll over into the bullish camp, so to speak. Once we close above 1839, then we're going to be pretty much clearing the weekly targets, and then we're going to be moving on into the monthly targets that tell us all the way up to about 1920 is possibly and potentially possible to accomplish over the near term. The yearly signal now, trading above 1810, activates the sell one level of 2150 that we published actually on September of last year. If you go to my Seeking Alpha profile, you can see the report that was posted there on the 28th of September. As we do the annual reports or the annual signals using the calendar year, September to September. So if you're trading the market and you've been following me here the last few videos, obviously I've been recommending to get long. 1791 was a level yesterday that we saw coming into an area that we call, and the AI pretty much recommends accumulation of supply. And as we enter into these targets of 1830, 34 to 39, we begin to get the weekly targets completed. What I would like to do here is show you basically, if you go to my website and you go to videos, we're publishing the latest artificial intelligence produced by the VCPMI, and Niki the robot is giving us a very, very clear picture of where we're going. And then if we take a look at the report that we just published here at the beginning of the week, we'll be able to see what Niki was looking at.
Hello everyone, this is Equity Management Academy with a weekly gold report for July 9, 2021. Summary. The weekly trend momentum of 1837 is bearish. The weekly VCPMI of 1804 is bullish price momentum. A close below 1804 stop negates this bullishness neutral. If shorts take profits 1789 to 1770. If long take profits 1824 to 1839. Trading instructions. Weekly trend momentum, 1837, bearish. The gold futures contract closed at 1811. The market closing below the 9-day SMA 1837 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Weekly price momentum, 1804, bullish. With the market closing above the VC weekly price momentum indicator, at 1804, is confirmation that the price momentum is bullish. A close below the VC weekly, it would trigger weekly stops, and negate the bullish trend to neutral. Weekly price indicator. Exit. Longs, sell 1, 1824. Sell 2, 1839. Exit. Shorts, buy 1, 1789. Buy 2, 1770. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 1789 to 1770, and go long on a weekly reversal stop. If long, use the 1770 level as a stop close only, and good till cancelled order. Look to take profits on longs as we reach the sell 1 and 2 levels of 1824 to 1839 during the week.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2Trade.com for more details.
I wanted to take a look and review basically the weekly report produced by the AI of the variable changing price momentum indicator algorithm. That as we take a look at the market high today of 1831, that we pretty much have completed the short-term targets, as well as the weekly targets of 1834. What this means basically now, to get into more of the intelligence, the artificial intelligence of the algorithm, that essentially when the price is trading in the red zone, and if you take a look at here, we've seen a high of 1831, and this area is between the sell 1 daily of 1818 to 1824, which integrates itself with the weekly 1824 to 1839, and with a high of 1831. So prospectively, the AI told us that this area here is a high probability area that we can expect sellers, supply, to come into the market. Now, it does not change the underlying long-term outlook of the market, but it gives you a structure for you as a day trader, if you're trading in precious metals, for you to be able to see the short-term extremes of the supply and demand. And based upon the synergy of the market and pretty much, what that supply basically is identified, it will reflect on the price. And more than likely, when you see the market trading in this mathematical range, the probabilities are pretty high that we will see some supply as we're taking a look at. So from a trading point of view, we are flat. We've taken profits here, and the market may be activating a short trigger from the weekly now of 1824 and the daily of 1827. On the close of this bar at 7:15, a close below 1822 activates a short trigger as it has right now. Now, if you choose to take this trade, then you can use the stop above of 1827 to enter the trade. Right now, the market has come down a little beyond or more than, what I would like to not only take as a risk on the trade, which is about $300, but also the market is entering a high level of volatility that essentially by closing a trading above the daily sell to level, the program begins to tell you basically, particularly if we integrated with a weekly, that the path of least resistance now to take the highest probability trades is in buying corrections, ideally into the blue zone. Now, if you're a high risk trader, you can go short, put your stop at 1824 or 1827 to go short and follow the methodology of the algorithm. What I want to do and what I'm suggesting here, based upon the fact that, we got this tremendous inflationary numbers coming out, the producer price index at 7.3%. You got the CPI came out yesterday at 5.4%. It's pretty obvious that we are getting some very heated inflationary numbers. And I believe it's going to be just a matter of time before we see that reflected in the price of gold and silver. As you can see on the chart here, I did a bit of a Fibonacci fan line resistance levels to identify basically where the market is identifying an overbought condition. And here you can see the third fan line is being broken out. And we have targets still at about 1839. Right above it, we have another major trend line resistance that brings us into this channel that on a short-term basis, it seems that we're breaking out of. The lower end of this channel here represented a major reversal to the upside, confirming the entry point on 6/30 on June the 30th, making a low of 1770. This low here coincided with a golden ratio Fibonacci retracement. Very powerful signal that engaged basically the algorithm, the VCPMI, verifying that this is a high probability area unfolding into the average targets that we are penetrating and accomplishing. Thus, it's activating the higher fractals in price all the way up to 1839. And what I've been looking for basically is confirmation that we're moving towards a breakout point. And that breakout point is in the 1839 level basis the August contract in gold. So I am not personally looking aggressively to short the market up here, as even though we are entering this overbought condition, the path of least resistance, if you include the bigger trends in the market, appears that we are rolling over, you might say, into the bigger picture or the higher fractal in price that points all the way out to about 1900, 1920. Trading above 1810 puts the yearly into place. The yearly sell one level target activated at 2150. So what I'm doing here, for the benefit of basically my subscribers, for the benefit of new people that are joining me here, and I appreciate basically all the comments that you're making, and thank you for subscribing. It does help if you click on like and subscribe to meet the algorithm requirements, so to speak, in order to be able to provide you with this content on a daily basis. I'm showing you basically how I'm looking at the market on a personal basis and how I'm trading the market in using the VCPMI. The VCPMI is an automated algorithm that was written in C++, easy language. And in fact, what we've been able to do is to verbalize that code written in C++ or easy language through Niki the robot that we're going to be using more frequently, giving us this incredible mathematical perspective and algorithm that we can hear, that we can see, and we can take advantage of. So for the time being, what I am suggesting here, fellows, stay long. If you traded alongside of the market, you're in a target zone in futures, and look to buy, any corrections here, particularly as we move into the buy to level. Let me take a look at the silver market. And the silver market obviously got up almost to that daily sell one level of 2660, and not quite making that high, but getting pretty close to it at 2657.58. That's pretty close. The market experienced supply, as it is expected when you're in the red zone, and it reverted right back down into that 2633 area, which is the daily sell one level, and also coincides with the weekly average of 2631. Now, the weekly signal has activated 2679 as the target for silver, unless it comes down and closes below 2631, which would be your protective level on the price momentum, on the trend. So it's a bit of a mixed signal here. Daily completing targets almost all the way up to 2660, coming back down into that now support at 2633. And right underneath there is the average price of 2631. Let me just take a look quickly at GBTC, which is the Grayscale Bitcoin Trust, it's up from the buy to a level of 26.51 by making a low of 26.32. The nearest target is 27.55, and the average price is 29.39, which is what's being activated. I'm going to take a look at coin, which is the other virtual asset that we're looking to trade and add, basically trading around the average price of 243. It's in a neutral to bullish zone. The other instrument that we're looking at is the Grayscale Digital Fund, which appears to offer a just an exciting potential if you want to trade into digital assets, for example. And so we are diversifying into a basket of precious metals, and digital assets seems to be the case. The aggressive instrument that we trade in the gold mining shares is Nugget, aggressively and short term. So there are instruments that you can measure, that you can trade outside of the futures contract, basically in order for you to build a position, to build what I call it a very powerful inventory in this environment here that continues to be very, very inflationary, obviously, as the numbers reflect. And the policies of Chairman Powell do not seem to, at least in the obvious, indicate any changes are going to take place anytime soon. He's maintaining a status quo position, and feels pretty much that this inflationary spiral that we're moving into is nothing but temporary. And when you take a look at the 10-year note, it's really hard to argue with the fact that the Treasury note market is not anticipating any kind of inflationary pressure. In fact, yields are down to about 136.8, down about 4 or 5 basis points. So I'm watching the 10-year note very, very closely to give me an indication of any pressure, you might say, in the credit markets, as we had back in 2008. But so far, the bond markets, or the 10-year Treasury note, which is the short end of the yield curve, is indicating that this inflation may be transitory. Let's continue to hope that it is, and begin to see maybe over the next couple of months here, some of this pressure and bottleneck that has been created in the supply chain be alleviated. Thank you again, everybody, for the opportunity to share this information with you, and have a great trading day. Hey, I'll talk to you real soon. Talk to you next time. Take care.